Today we are going to study audit report. So audit reports. What will we study? After studying this chapter, you will be able to understand the first thing is the meaning of the audit reports, and there are also different types of audit reports are there according to the SA, that is standards of auditing. Okay, then there are different aspects of reporting. Here different types, different aspects of reporting we have to understand. Then determine and apply knowledge of reporting for further study and professional practice. So we will take balance approach, that is for examination point of view as well as for practical purpose. We have to know this standard very much. So for practical also this is very important. Audit reports. Now just overview, chapter overview. Audit report meaning, types of audit report, elements of audit reports, audit report formats. So what is audit report? Audit report, it shows the true and fair view, whether it is a true and fair view, that opinion is given by the auditor through audit report to the stakeholders. So this is very important. So results are here shown, whether company performs positively, whether company performs negatively, what is its financial position by auditor through audit report. Here comes the auditor's report on financial statements. So report is made on financial statements. You know what is financial statement? Financial statement, statement of profit and loss, balance sheet, notes to the accounts, shareholders positions, cash flow statements. These are the financial statements. On this, audit report will be prepared by the auditor to the stakeholders. So that is an important point on financial statement. So auditor reports will be prepared on the financial statement. SA 700 series is purely dedicated to the auditor report to be issued by the auditor. That is one more point. SA 700. SA 700 series deals with the audit report. We have 4 SA with regard to the audit report. We will glance these 4 essays. SA 700 revised, SA 701 newly introduced, SA 705 revised, SA 706 revised. These are the 4 standards on auditing with regard to audit report. 4 standards are covered in this SA 700 series. So first is 700, that is forming an opinion and reporting on financial statements. This is one of the basic objective of the essay. Standards on auditing, the basic objective is forming an opinion. So essay 700 talks about forming an opinion by the auditor on the engagement on which he audited. So forming an opinion is a essay 700, and reporting on financial statement. You know what is financial statement. Reporting, for this they will have provided form, that is format and content. This is the basic purpose of the essay 700. So head, forming an opinion and reporting on financial statements. Purpose, forming an opinion on the financial statement, as it is mentioned. Form and content of the audit report. Effective date 1st April 2017. This is just a glance. Now essay 701, what is this? Communicating key audit matters in the independent auditor's report. Essay 701, this is all about the communicating. This is a very important word, key audit matters, which are very significant. So communicating key audit matters in the independent auditor's report. It cannot be influential to the audit firm or a company. So it should be independent. Objective should be independent of the whichever he deals the company. So essay 701, communicating key audit matters in the independent auditor. What is the purpose? To enhance the communicative value of the auditor's report by providing greater transparency about the audit that was performed. So on this, greater transparency will be provided. Number 2, to assist the user in understanding those matters that in auditor's professional judgment were of most significance in the audit of the financial statement of the current period. It is effective from 1st April 2017. So 2 purposes are there. One is provides great transparency, correct, and it provides significant matters. It provides significance, most significance in the audit of the financial statement of the current period. Whatever the significant matters are there, that matters will be entered here in the essay 701 as a communicating key audit matters in the independent auditor's report. Third type, essay 705, modification to the opinion in the independent auditor's report. Essay 705, modification. So it talks about the modification to the opinion in the independent auditor's report. So modification to what? modification to the opinion. See, this is the proper opinion without any modification. This will be called as unqualified report. If something is modified in the report, then it will be known as modified to opinion. So we are dealing with this modification in this standard. So modification to the opinion in the independent auditor's report. What is the purpose? To issue an appropriate audit report when the auditors considers the modification in auditor report is necessary. So this modification what is done by the auditor, it is necessary. That is a one point. Another point is to deal with the revised form and the content when the modification of the opinion take place. So SA 705 talks about the when the modification takes place, what is the content should be followed, what is the format should be followed. That will be explained by the SA 705. We have MCQ in our examination, therefore each and every point is important. We cannot skip any point. So it will be effective date from the 1st April 2017. Next comes SA 706 revised emphasis of matters paragraphs and other matter paragraphs in the independent auditor's report. Essay, this is all just overview. Emphasis if auditor want to emphasize some matter, then SA 706 will be applicable. Emphasis of matter paragraphs and other matters also. Paragraph in the independent auditor's report. What is the purpose? To draw users' attention to matter or matters. So specific matter, single matter, or it can be more than one matter. So main purpose is user attention should be drawn by that report, presented or disclosed in the financial statements, and which is fundamental for the understanding of the users. Of course, it is presented and disclosed, that is common, but it is essential, important, necessary to the stakeholders. It is a fundamental. The word used, not necessary. It is fundamental, not necessary. It is a fundamental for the understanding of the users. Not presented or disclosed in the financial statement and which is relevant for the understanding of the users. First point, which is disclosed matters, that is necessary to show in the emphasis of matters. Sometimes in the financial statement not disclosed. First one, presented and disclosed. Second point is not presented and disclosed in the financial statement, but it was a necessary fundamental. That also comes in emphasis of matter paragraph or other matter paragraph. So not presented or disclosed in the financial statement, and which is relevant for the understanding of the users. It is which was relevant, that comes under SA706. So these are the basics with regard to 700 series. First one, forming an opinion and reporting on financial statement, SA 700 communicating key audit matters, that provides great transparency and significance. SA 705, modification. In the case of modification, how to modify, these are necessary in the case of modification. And the form and content it will be explained by the SA 705. 706, emphasis of matter paragraph and other matter paragraph in the independent auditors report. Two purpose, presented and disclosed, which are fundamental, not presented and disclosed, which are relevant. Moving on, I hope you understood the basics. Now we will move on to SA 700. SA 700, forming an opinion and reporting on the financial statements. Okay, it deals with the auditor's responsibility to form an opinion, as we discussed that one, on the financial statements. It also deals with the form and content of the auditor's report issued as a result of an audit financial statement. So to form an opinion on the financial statement and the form and content of the auditor's report. What is the objective? As per SA 700, the objectives of the auditors are to form an opinion, of course, on the financial statement. Based on what? Based on the evaluation of the conclusions. From where the conclusion is drawn? From the audit evidence obtained. So he has to check, auditor has to check sufficient and appropriate audit evidence. On that conclusions are made. On that conclusions evaluation shall be made. On such evaluation opinion should be formed. That is the point number A, objective. To form an opinion on the financial statements based on the evaluation of the conclusion drawn from the audit evidence obtained, and to express clearly that opinion through written report. SA 700. Forming an opinion and reporting on the financial statements. So objectives A, we know, to form an opinion, of course, based on what? Based on the evaluation of the conclusions that is drawn from the audit evidence. Written form. So these are the two objectives. To form an opinion on the financial statement based on the evaluation of the conclusion drawn from the audit evidence obtained, and to express clearly that opinion through written report. Mr. Auditor X firm audited the X firm and issued audit report on orally. This is wrong. This should be in written report. Written report should be made by the independent auditor. So SA 700 deals broadly four aspects. One is, what is the purpose? Here, what is the purpose? 3.1. Second, basic elements of the auditor's report. Basic elements of the audit report, that format, title, addressee, that thing. Number 3, these are the very important for the examination point of view. This includes title, addressee, auditor's opinion, basis for opinion, responsibility of the management, responsibility of the auditor. That also shall include location, place, other reporting factors, signature, place. Next comes point 3, auditor's report prescribed by law or regulation. Prescribed by law or regulation. Point number 4, auditor's report for audits conducted in accordance with the both standards on auditing issued by the ICAI and the international standards on auditing or auditing standards of any other jurisdiction. So audit as per both standards, ICAI or international or other jurisdiction. These are the 4 elements or aspects, parts in the SA 700 forming an opinion on the financial statements. So we will look into this important SA 700 one by one. So what is the purpose? Mr. A appointed for the audit of the XYZ Limited. He gives an auditor's independent report. Mr. B appointed for the ZYX Limited and he gives one independent report. If I want to compare, if a stakeholder want to compare both reports, it should have some form and content should be consistent, right? He cannot make his own style in the report. He cannot make his own style. Some regulation has to be done for the form and content for the consistency purpose. correct. So this is the purpose for the SA 700: consistency in form, to create form and the content, so it will be easy for the users. The requirement of this essay, that is essay 700, are aimed at addressing an appropriate balance between the need for consistency and comparability. So as I explained, can be compared through consistency and comparability in the audit reporting globally, and the need to increase the value of auditor reporting by making the information provided in the auditor's report more relevant to users. This is one of the keyword: more relevant to users. So keywords are consistency, comparability, more relevant to the users. This essay promotes the consistency, again consistency, promotes the consistency in the auditor's report, but recognize the need for flexibility. Flexibility can be there, that we will see emphasis of matter paragraph, to accommodate particular circumstances of individual jurisdictions. So according to individual jurisdictions, flexibility is there. Consistency in the auditor's report when the audit has been conducted in accordance with the essay promotes credibility in the global marketplace by making more readily identifiable those audits that have been conducted in the accordance with the global recognized standards. It also helps to promote the user's understanding and to identify unusual circumstances when they occur. So it more relevant to the users and the credibility. One more keyword: credibility. Globally. So these are the key points. So you know the purpose. Second point is basic elements of the auditor's report. So first point is purpose, second point is basic elements of the audit report. Okay. Forming an opinion and reporting of financial statement, the auditor's report shall include the basic elements in accordance with the essay. It will come title, addressee, title as the independent auditor's report. So from that we can distinguish difference, we can identify which one is issued by other than the independent auditor. So from the title itself we can identify whether it is an independent auditor's report or not. Addressee, usually shareholder, generally shareholder, specific case it can be board of directors. Opinion of the auditor, basis of the opinion, management responsibility for the financial statement, auditor's responsibility, other reporting responsibility, location of the description of the auditor's responsibilities, signature, place, date. These are the basic elements. We'll see one by one. Title. So as I say, it can From the name itself, from the title itself, we can differentiate the report. Which one is independent audit report issued by the auditor and the issued by the others. The auditors the auditor's report shall have title, correct, that clearly indicates that it is the report of an independent auditor. Example, an independent auditor's report distinguishes the independent auditor's report from reports issued by others. Second point, addressee. Under basic elements, so we can have general case. As you know, it is a members of the company, owners. In case of special, it can be board of directors, those charged with the governance. Addressee, the auditor's report shall be addressed as required by the circumstances of the engagement. Example, the report could be addressed to the members of the company in case of general purpose, that is statutory financial statements, and to the board of director in case of special purpose financial statements. Third paragraph or basic element is auditor's opinion. The first section of auditor's report shall include auditor's opinion and shall have the heading opinion. So third point is auditor's opinion. And should have heading as opinion. Okay, we will go in deep. Auditor's opinion. The opinion section of the auditor's report shall also identify the entity whose financial statements have been audited. So it shall also identify the entity. Example, XYZ Limited, whichever the engagement name of the company. Identify the entity. So auditor's opinion under it also shall include identify the entity. State the financial statement have been audited. State that financial statement have been audited. Identify the title of each statement comprising the financial statement. Identify the title of each statement comprising the financial statement. Financial statement have different titles, so each statement has to be have the title. Refer to the notes including the summary of the significant accounting policies. refers to the notes. Next, specify the date of or period covered by each financial statement comprising the financial statement. Date and period covered. From 1st April 2019 to 31st March 2020, like that. Date and the period covered. So these are the A, B, C, D, E points should be covered. So when expressing unmodified opinion, that is there is a no material misstatement. Unmodified opinion, unmodified, there is a no modification required. Unmodified opinion means unqualified, no qualification required, or a no misstatement found. That is a clean opinion. This is known as a clean opinion. Basically, it's saying as a financial statement shows true and fair view. In our opinion, this statement shows, financial statement shows true and fair view. That is the unmodified opinion. When expressing unmodified opinion, so auditor audited the financial statement and concluded that there is a no problem, there is a no, it shows true and fair view, no material misstatement on the financial statement prepared in accordance with the fair representation framework. The auditor's opinion shall, unless otherwise required by law or regulation, use one of the following phrases which regarded as being equivalent to. So these phrases has to be used when the unmodified opinion. When in our opinion the accompanying financial statements present fairly in all material respects in accordance with the whichever is the applicable financial reporting framework, IFRS, NDAs, whatever it may be, or it can be use this following phrase: in our opinion the accompanying financial statements give a true and fair view of that company in accordance with the applicable financial reporting framework. These phrases can be used in the case of expressing an unmodified opinion on the financial statement. When expressing unmodified opinion on the financial statement prepared in accordance with the compliance framework, the auditor's opinion shall be that the accompanying financial statements are prepared in all material respect in accordance with the applicable financial reporting framework in case of a compliance framework. If the reference to the applicable financial reporting framework in the auditor's opinion is not to accounting standards, the auditor's opinion shall identify the origin of other framework. If it is not accounting standard financial reporting framework, shall identify the origin of the such other framework. So in case of unmodified opinion, if the financial reporting framework is not accounting standard, then it should identify the origin of such other financial reporting framework, for example IFRS. Next point is basis for opinion. So opinion paragraph over. Auditor's opinion over. Identify the entity. State the financial statement. title word in case of unmodified opinion, financial reporting framework, whether they are not following the accounting standard, identify the origin of such other financial reporting framework. So these are the A, B, C, D, E point. Identify and the entity whose financial statement have been audited. B, the financial statement have been audited. Identify the title of each statement comprising the financial statement. Refer to the notes including the summary of significant accounting policies and specify the date of or period covered by each financial statement comprising the financial statements. So we will move on to basis for opinion. On what basis opinion is made? Basis for an opinion. The auditor's report shall include a section directly following the opinion section. Okay, after opinion section, basis with heading basis for opinion. So heading is basis for opinion. It includes A, B, C, D. State that the audit was conducted in accordance with the SA. So state that the audit was conducted in accordance with the SA. So all the standards on auditing followed while auditing the engagement. Refers to the section of the auditor's report that describes the auditor's responsibility under SA. On what section it describes the auditor's responsibility under SA? So section of the auditor for report shall be described. Refers to the section of the auditor's report that describes the auditor's responsibilities under the SA. Auditor's responsibility should be referred that particular section in the audit report. Includes a statement that the auditor is independent of the entity in accordance with the relevant ethical requirements relating to the audit. It can be Companies Act, it can be any other relevant act, or it can be CA Act also, and has fulfilled the auditor's other ethical responsibility in accordance with these requirements. The statement shall refer to the codes of ethics issued by the ICAI. So auditor is independent. So regulatory authority or code of ethics. That should be covered under basis for opinion. States whether the auditor believes that the audit evidence the auditor has obtained is sufficient and appropriate to provide basis for the auditor's opinion. State whether whatever he collected, whatever he obtained, sufficient and appropriate evidence for his opinion, whether it is enough to make opinion judgment, or should he make a disclaimer that should be mentioned stated in the basis for opinion paragraph. These are the 4 points A, B, C, D. Standards on auditing, whether it's followed. Auditors report, refer the section. Auditor is independent, regulation or code of ethics, stand sufficient and appropriate audit evidence for the opinion. States that the audit was conducted in accordance with the standards on auditing. Refers to the section of the auditor's report that describes the auditor's responsibility under the SA. Includes a statement that the auditor is independent of the entity in accordance with the relevant ethical requirements relating to the audit and has fulfilled the auditor's ethical responsibility in accordance with these requirements. The statement shall refer to the code of ethics issued by the ICAI. Next, states whether the auditor believes the audit evidence the auditor has obtained is sufficient and appropriate to provide basis for the auditor's opinion. It should come under the basis for the opinion. This is not a basic element. We will see going concern. Wherever applicable, the auditor shall report in accordance with the SA 570. That is going concern. Key audit matters. We know SA 701. For audits of the complete sets of general purpose financial statements, the listed entities, the auditor shall communicate key audit matters in auditor's report in accordance with the SA 701. When the auditor is otherwise required by law or regulation or decides to communicate key audit matters in the auditor's report, the auditor shall do so in accordance with the SA 701. So when there is a key audit matters, SA 701 will be applicable. Now comes to the responsibility for the financial statement, that is management responsibility for the financial statements. Auditor's report shall include a section with the heading responsibility of the management for the financial statements. The auditor's report shall use the term that is appropriate in the context of the legal framework applicable to the entity and need not refer specifically to the management. In some entities, the appropriate reference may be to those charged with the governance. It can be reference can be to the responsibility of financial statement to prepare. It can be reference can be made to the management directly or sometime those charged with the governance. So appropriate reference should be made. These sections of the auditor's report shall describe the management responsibility for preparing and the financial statement in the accordance with the applicable financial reporting framework and for such internal controls as management determines is necessary to enable the preparation of the financial statement that are free from material statement whether due to fraud or error. So preparation of the financial statement of P&L, balance sheet, these are responsibility of the management. All this should be provided by the management. Auditor will just audit, or first management should provide and should be signed and given to auditor. Auditor will audit and give his audit report, that is opinion, on this financial statement. So preparation of the financial statement, responsibility of the management, and also internal control with regard to maintain whatever with regard to the financial statement is the responsibility of the management, and assessing the entity's ability to continue as a going concern and whether the use of the going concern basis of accounting is appropriate, as well as disclosing, if applicable, applicable matters relating to going concern. The explanation of the management responsibility for this assessment shall include the description of the when the use of the going concern basis of accounting is appropriate. So assessment of the going concern. Assessment of the going concern is the responsibility of the management. This section of the auditor's report shall also identify those responsible for the oversight of the financial reporting process. When those responsible for such oversight are different from those who fulfill the responsibility described in the next paragraph. In this case, the heading of this section shall also refer to those charged with the governance or such term that is appropriate in the context of the legal framework applicable to the entity. So whoever responsible, that name shall be entered in the paragraph. When the financial statements are prepared in accordance with the fair representation framework, the description of the responsibilities for the financial statement in the auditor's report shall refer to the preparation and fair presentation of these financial statements, or the preparation of the financial statement that give true and fair view as appropriate in the circumstances. Fair representation framework. Next comes auditor's responsibility for the audit of the financial statement. We are explaining the basic elements of the audit report. We mainly explained 4 parts: purpose, basic elements. Under basic elements, 6th point, auditor's responsibilities with regard to the financial statement, for the audit of the financial statements. The auditor's report shall include section with the heading Auditor's responsibilities for the audit of the financial statements. This should be the heading: Auditor's responsibility for the audit of the financial statement. Auditor's responsibility for the audit of the financial statement. Auditor's responsibility for the audit of the financial statement. Auditor's responsibility for the audit of the financial statement. This section of the auditor's report shall state that the objective of the auditor, again same, essay 200, obtain reasonable assurance about the whether the financial statements are as a whole free from material misstatement, whether due to fraud or error, and issue an auditor's report that includes the auditor's opinion. So obtain reasonable assurance, not a absolute assurance, not a limited assurance. There is a absolute assurance, there is a reasonable assurance, there is a limited or a negative assurance, there is a no assurance. But auditor should obtain reasonable assurance, high level of assurance. This is a high level of assurance, but not full assurance, not absolute assurance. So that is the main point should be stated under responsibility for the audit of the financial statement. Auditor's responsibility. State that objective of the auditor are to obtain the reasonable assurance about whether the financial statements as a whole free from material misstatement, whether due to fraud or error, and issue auditor's report. That is the objective. So first one is state the objective. What is the objective? Obtain a reasonable assurance. Then they give the report, that is the basic objective. Issue of an auditor's report. B. State that the reasonable assurance is high level of assurance. Again, same thing. Reasonable assurance is a high level of assurance, but is not a guarantee that audit conducted in accordance with the SA will always detect material misstatement when it exists. So, reasonable assurance is a high level of assurance. Reasonable assurance is a high level of assurance, but it does not give guarantee that it will not have a material misstatement. State that the misstatement can arise from fraud or error, and either describe that they are considered material if individual or in aggregate they could reasonably expected to influence the economic decisions of users and taken on the basis of these financial statements, or provide a definition or description of materiality in accordance with the applicable financial reporting form. So misstatements can be there by the fraud if there is a planned fraud that cannot be detected. So misstatements can be there through fraud. So in this case materiality can be mentioned, level of materiality. So state that the misstatement can be arise from fraud or error, and either describe that they are considered material if individual or in aggregate they could reasonably expected to influence the economic decision of the users taken on the basis of these financial statements. Of course, CA should be, auditor should be on the safer side. Provide a definition or a description of materiality in accordance with the applicable financial reporting framework. That is the auditor's responsibility. Under that, again, Roman number 2, the auditor's responsibility for the audit of the financial statements section of the auditor reports shall further auditor responsibility in audit of the financial to exercise the professional judgment and maintain the professional skepticism throughout the audit of the as per AS. So to exercise the professional judgment and maintain the professional skepticism. Second point, to describe an audit by stating that the auditor responsibility are to identify and assess the risk of material misstatement of the financial statement, to obtain an understanding of the internal control relevant for the audit, to design audit procedures, to evaluate the appropriateness of accounting policies used, reasonableness of the accounting estimates, related disclosure made by the management. 3 points: policies, estimates, related disclosures made by the management that should be evaluated to evaluate the appropriateness. It is the responsibility of the auditor. It is in evaluation of the appropriateness of the accounting policies is the responsibility of the auditor. The maintenance and the follow up of the accounting policy is the responsibility of the management. Evaluation of the appropriateness of reasonableness of accounting estimates is responsibility of the auditor, but the follow of the accounting estimates standards NDAs is the accounting standard is the responsibility of the management. So auditor should evaluate the appropriateness. Next, to conclude on the appropriateness of the management's use of going concern basis. Assessment should be done by the management, that is their responsibility, but the conclusion on appropriateness of the management use of going concern basis is the responsibility of the auditor. These all question can be asked in the MCQ. So conclusion on the appropriateness of management is the responsibility of the auditor. To evaluate the overall presentation structure and content of the financial statement is the responsibility of the auditor. To describe the auditor's responsibility in group audit engagement as per SA 600, joint auditor. So these are the responsibilities of the auditor. So first one is exercise the professional judgment and skepticism. Second point, stating the auditor responsibility with regard to risk of material misstatement, identify and assess. Then the internal control, understanding for the audit procedure, and the accounting policies, estimates and the related disclosures that should be evaluate the appropriateness. And the going concern, conclusion on the appropriateness of management use of the going concern is the responsibility of the auditor. Evaluate the overall presentation structure, content of the financial statement is the responsibility of the auditor. So here evaluation, conclusion, evaluation, obtaining the understanding, identifying, assess, these kind of works are the responsibility of the auditor. State that as a part of an audit in accordance with the SA, auditor exercises the professional judgment and maintains the professional skepticism throughout the audit. Describe an audit by stating that the auditor's responsibility are to identify and assess the risk of material misstatement of the financial statement, whether due to fraud or error. To design and perform audit procedure responsibility with those risks, and to obtain audit evidence that is sufficient and appropriate to provide basis for auditor's opinion. To obtain, here risk of material statement should be assessed and identified, identified and assessed. In the case of internal control, obtain the understanding. In case of appropriateness, we have three: accounting policies, accounting estimates, related disclosures. Evaluate the appropriation. And the going concern, conclusion, conclude on the appropriateness of management's use. And the presentation structure, content of the financial, evaluate the overall presentation structure and content of the financial. These are the 5 points. 1, 2, 3, 4, 5 should be stated. Here this is separate, this is separate. So these are the 3 points are very important. To describe an audit by stating that the auditor responsibility are to evaluate the appropriateness of accounting policies used, reasonableness of accounting estimates, related disclosures made by the management. Very important point. SA 600 using the work of another auditor, not a joint auditor, another auditor. SA 600 applies further, describes the auditor responsibility in a group audit, that is another auditor means branch auditor, by stating the division of responsibility for the financial information of the entity, by indicating the extent to which the financial information of components is audited by the other auditors have been included in the financial information of the entity. Example, number of divisions, branches, subsidiaries or other components audited by the other auditors. Such information should be mentioned. Auditor's responsibility for the audit of the financial statement section of auditor's report also this is a third part under auditor's responsibility. So we seen the first part here, objectives. Reasonable assurance is a high level of assurance. State the misstatements can arise from fraud or error in that. Individual materiality aggregation and the definition of description of materiality. Next comes the 5 points with regard to the further responsibility. Again, further responsibility is there under 3. Roman number 3. The auditor's responsibility for the audit of the financial statement section of the auditor's report also shall state that the auditor communicates with those charged with the governance regarding, among the other matters, the plan, scope, and timing of the audit, and the significant audit findings, including any significant deficiency in the internal control. So that should be state that the auditor communicates with those charged with the governance regarding, among other matters. It can be timing, scope of the audit, significant findings, that should be stated, or it can be deficiency in the internal control, that also. State that the auditor provides those charged with the governance with the statement that the auditor has complied with the relevant ethical requirements, such as independence, communicate with them all the relationships, other matters as they may be reasonably thought to be bare. For audits of the financial statement of all such entities for which key audit matters are communicated in accordance with the SA 701, state that from the matters communicated with those charged with the governance, the auditor determines those matters that were most significant in the audit of the financial statement of the current period are therefore key audit matters. In accordance with the requirements SA 701, the auditor describes these matters in the auditor's reports unless the law or regulation precludes public disclosure about the matter, or when in extremely rare circumstances the auditor determines that the matter should not be communicated in the auditor's report because the adverse consequences of doing so are reasonably expected to outweigh the public interest benefits of such communication. Next comes point number 9. What was the 8? Auditor's responsibility. There was included going concern and all, right? Going concern, key audit matters, responsibility of the auditor. Now it is a number 9, location of the description. Location of the description. The description of the auditor's responsibility for the audit of the financial statements required by this essay shall be included within the body of the auditor's report. So location cannot be outside of the auditor's report about the auditor's responsibility. Within appendix to the auditor's report, in which case the auditor's report shall include a reference to the location of the appendix. If there is an appendix, you should have reference. By specific reference within the auditor's report to the location of such description on website or of an appropriate authority where the law, regulation, or the auditing standard expressly permit the auditor to do so. The permission should be there. When the auditor refers to description of the auditor's responsibility on a website of an appropriate authority, the auditor shall determine that the such description address and is not inconsistent with the requirement of this essay. The location of the description of the auditor's responsibility. 10. Other reporting responsibility. Auditor's responsibility. Other reporting responsibility. If auditor addresses other reporting responsibility in the auditor's report on the financial statements that are in addition to the auditor's responsibility under SA, these other reporting responsibilities shall be addressed in the separate section in the auditor's report with the heading report on other legal and regulatory requirements. This is the heading. Otherwise, as appropriate to the content of the section, unless these other reporting responsibility address the same topics as those presented under the reporting responsibility required by the SAs, in which the case the other reporting response may be present in the same section as related reporting elements required by the SA. If other reporting responsibility are presented in the same section as related report elements required by the SA, the auditor's report shall clearly differentiate the other reporting responsibility from the reporting that is required by the SA. That should be differentiate. Clearly should differentiate. If the auditor's report contains a separate section that addresses other reporting responsibility, the requirement of this essay shall be included under the section with the heading report on the audit of the financial statement. The report on the other legal requirement and regulatory requirements shall follow on the report on the financial audit of the financial statements. Very simple and straightforward. Signature of the auditor. The auditor's report shall be signed, of course. The report is signed by the auditor, cannot be any other person, that is the engagement partner in his personal name. Where the firm is appointed as the auditor, the audit report is signed in the personal name of the auditor and in the name of the audit firm. The partner or proprietor signing the audit report also needs to mention the membership number assigned by the ICAI. They also include the registration number of the firm wherever applicable as allotted by the ICAI in audit report signed by them. It can be signed by the audit partner with the membership number and the firm registration number. The report is to be signed by the maker of the report, normally ACA. In practice, signs the report in the name he is registered as a practitioner. If he is an individual, it may be his individual name or the firm name of which he is a sole proprietor. For those members in practice as partnership firms, it is usual for them to sign in the firm's name. Under section 145 read with section 141 subsection 2 of the Companies Act 2013, only the person appointed as an auditor of the company or firm is so appointed, only the partner in the firm who is a chartered accountant may sign the auditor's report or sign or authenticate any other document of the company required by the law to be signed or authenticated by the auditor. If it is a firm consisting of 9 members, 8 are the CA in practice, 1 is a law holder, LLB holder cannot sign, only CA can sign. It is obvious that the person appointed makes the report, yes, otherwise the very essence of the appointment of the particular man or a firm will be lost. If it is audited by the XYZ firm, ZXB Limited or a firm, other firm cannot sign the particular audit engagement. So it is obvious that the person appointed makes the report, otherwise the very essence of the appointment of the particular man or a firm will be lost. In a profession, the particular skill and the reputation of the practitioner counts considerably, and if anybody else is allowed to make the report on behalf of the person appointed, then this confidence in the person will cease to be factor. This has the other implications also from the point of view of the professional responsibility. It will create an unusual legal situation. It also has implications from the standpoint of the practitioner. If in respect of the appointments held by him, the reports are made by others, gradually the goodwill of the practitioner will end and the clients may shift to the person which actually making the report. If a ABC were in practice as ABC and co CAs, any of A or B or C could sign as ABC and co. This is very clear. So any partner in the firm can sign to the engagement in his own hand. But now, in the view of the objection raised by the Department Company Affairs to this practice, the Council of Institute in the SA 7, the auditor's report on the financial statement has recommended to the members who are in practice in partnership that signature on or authentication of the auditor's report or any other document required to be signed or authenticated by the auditor should be made in the following manner. See, it is a recommendation by the Council of the Institute. So, for A, B, C and co, name of the firm, CA's name, firm registration number, signature, name of the member signing the audit report, and the designation if he is a partner or a proprietor. This is the example. In addition to the provisions of the Companies Act 2013 referred to above, clause 12 of the part 1 of the first schedule to the CA Act 1949, clause 12, first schedule, first part, provides the CA in practice shall be deemed to be guilty of professional misconduct if he allows a person not being a member of the institute or a member not being his partner. First is not a member of the institute or member of not being his partner to sign on his behalf or on behalf of his firm any balance sheet, P&L account, report or financial statements. So he is guilty of professional misconduct. You cannot allow. The provision is intended to safeguard the professional purity by excluding non-CAs from signing the aforesaid documents. By excluding CAs who are not in partners, it seeks to keep the line of professional responsibility clear. The partners are mutually agents and therefore allowing a partner to sign does not interfere with the clarity of the responsibility. This is all with regard to the signature of the auditor. Place of the auditor. Place of the signature. The auditor's report shall name specific location which is ordinarily the city where the audit report is signed. Audit is done at Kolkata, but CA is in Bangalore. He has to sign and mention the name, place of Bangalore. Date, because it says specific location which is ordinarily the city where the audit report is signed. So you can write place as a Kolkata because Kolkata is ordinary. It's a city where the audit report is signed. We came to Bangalore for limited period of time, for 1 day, 2 day. So better to write where the ordinarily the city where the audit report is signed. The date of the auditor's report. The auditor's report shall be dated no earlier than the date on which the auditors has been has obtained the sufficient appropriate evidence on which to be based the auditor's opinion on the financial statement, including the evidence that so 31st July 2019 sufficient and appropriate audit evidence obtained. So before that, audit report cannot be signed. It should be signed after collection of obtain of sufficient and appropriate audit evidence. All the statements that comprise financial statement, including the related notes, have been prepared, and those with the recognized authority have asserted that they have taken responsibility for those financial statements. Next, then only he can sign. Now comes to the third part: auditor's report prescribed by the law or regulation. Auditor's report prescribed by law or regulation. If the auditor is required by law or regulation applicable to the entity use of specific layout, the layout of the or a format content will be provided by the such law or regulation. That time wordings of the auditor's report, the auditor report shall refer to the essay. He can refer to the essay only if the auditor's report includes at a minimum each of the following elements. It should be included, then only auditor shall refer the essay. Title, addressee required by the circumstances of the engagement, opinion section containing the express of opinion on the financial statement, applicable financial reporting framework used to prepare financial statement, that is third point. Fourth point, an identification of the entity's financial statement that have been audited. Fifth, a statement that the auditor is independent of the entity in accordance with the relevant ethical requirements relating to the audit, where applicable section that addresses and is not inconsistent with the reporting requirements, say SA 570 going concern, where applicable a basis for qualified or adverse opinions section that addresses and is not inconsistent with reporting requirement SA 570, where applicable a section that includes the information required by SA 701, additional matters, key matters, additional information about the audit that is prescribed by law or regulation and that addresses and is not inconsistent with the reportings in that SA 701, a description of the management's responsibility for the preparation of the financial statements and identification of those responsible for the oversight of the financial reporting process, reference to the essay and the law or a regulation and description of the auditor responsible for an audit of the financial statement that addresses and is not inconsistent with the requirements. Auditor signature, place signature, the date of the auditor's report, this should be included in order to refer to the essay. Last part, auditor's report for audits conducted in accordance with the both standards on auditing issued by the ICA and the international standards. An auditor may be required to conduct an audit in accordance with the relation in addition to the standards on audited by the ICAI, the international standards on auditing or auditing standards of any other jurisdiction. If this is the case, the auditor's report may refer to the standards on auditing in addition to the international standards. Only if, but the auditor shall do so only if there is no conflict between the requirements in the ISA, International Standards on Auditing, or such auditing standards of other jurisdiction and those essay that would lead the auditor. So first point is no conflict to form a different opinion ought not to include emphasis matter paragraph or other matter paragraph that in particular circumstance is required by essay. And this is or form a different opinion or emphasis matter paragraph not to include. And the auditor's report, this should be satisfied. First one, no conflict. Second point, the auditor report includes at a minimum each of the elements set out in auditor's report, prescribed law or regulation discussed above when the auditor uses the layout or wording specified by the standards on auditing. However, reference to the whatever we discussed, that should be there. However, reference to the law or regulation in above paragraph shall be read as reference to the standards on auditing. The auditor's report shall thereby identify such standards on auditing. When the auditor's report refers to the both ISA or the auditing standards of a specific jurisdiction and the standards on auditing issued by the ICAI, the auditor report shall clearly identify the same, including the jurisdiction of the origin of the other auditing standards. Supplementary information presented with the financial statements. If supplementary information that is not required by the applicable financial framework is presented with the audited financial statements, the auditor shall evaluate whether in auditor's professional judgment supplementary information is nevertheless an integral part of the financial statement due to its nature or how it is presented. When it is integral part of the financial statement, the supplementary information shall be covered by the auditor's opinion. Whether such supplementary information is presented in a way that sufficiently and clearly differentiates it from the audited financial statement. If this is not the case, then the auditor shall ask the management to change how the unaudited supplementary information is presented. If the management refuses to do so, the auditor shall identify the unaudited supplementary information and explain in the auditor's report that such supplementary information has not been audited. This is not so important for the examination point of view, but the basic elements are the very important. SA 700. So this is with regard to SA 700. Next we will see SA 701, that is communicating key audit matters in the independent auditor's report. Thank you.